Your revenue is maxed out at some point with what you can move and how fast you can move it on those ships. And if you are limited on the amount of ships you have, you are limited on your amount of revenue. Welcome back to Broke Man Finance. My name is Adam, and in this video, we are going to talk about a penny stock that's getting a lot of attention lately. And to be honest, if we're being real, nobody had really heard about this company prior to the buzz that was getting generated about it on Reddit. That's when the majority of people started finding out about it. There was a lot of short interest on the stock, and it started drawing a lot of attention. And the buzzy little stock I'm talking about is Castor Maritime, ticker symbol CTRM. Castor Maritime is based out of the country of Cyprus, a very beautiful place, and it is a dry bulk shipping company. Dry bulk meaning steel, grain, coal, iron, that kind of thing. Very important stuff that we need a lot of. And go and check out the description below. There's several links down there that I use as I consider my finance tools. Bill Shark. They've lowered a lot of my bills and saved me money. Fundrise is how I invest into real estate without having 20% down on one property. Stock Whispers for all my stock news and how I get a lot of my early information for my stock and option plays. And there's lots of good stuff. So make sure to go check that out. And I really hope while you're at it, you consider subscribing and hanging out with us for just a little while longer. Like a lot of shipping companies, getting through 2020 was tough. And as we start to find that normal again, we see an uptick of the need of goods, dry bulk goods like I just mentioned. And we need ships to bring them to us. That's where companies like Castor Maritime stand to make a decent amount of revenue. But do they have enough ships to make enough revenue to satisfy investors? Castor Maritime recently made news about ship acquisitions that had a lot of people optimistic about their growth as a company. Currently, Castor Maritime now has 7 vessels in their fleet after a few acquisitions and are currently trading for approximately 98 cents per share at the time of this filming. For comparison's sake, let's look at some shipping competitors that they have. Let's look at their fleet sizes and what they're trading for. Genco has 41 ships in its fleet and are currently trading for around $11.66. Golden Ocean has 78 ships in their fleet and they're trading for $7.18. Safe Bulkers has 43 vessels in their fleet and are trading for $2.84, and the list goes on. While I was doing my research, every company that I was looking up had a pretty substantial fleet whenever you're comparing it to a company like CTRM or Castor Maritime. You can see right off the bat that although Castor they are trying to grow and they're trying to grow aggressively. I can dig it, but they are nowhere near the same size or shipping capabilities that these other companies have with just 7 vessels. Now, one might think that share price is going to continue going up because everybody feels like we're still a ways away from being back completely to normal if we ever get there. However, all 3 of these companies that I've mentioned, Safe Bulkers, Golden Ocean, Genco, are all trading higher than what they were trading for pre-Roni pandemic. That alone leads me to believe that the bounce back is already priced into these shipping companies. All right, so check this out. In their last quarter, Safe Bulkers had a net revenue of $52.6 million. This is the same company that has 43 vessels and are trading for $2.84. They had a net revenue of $52.6 million. Remember those numbers. Castor Maritime, according to their site, had a net revenue in their last reported quarter of $2.8 million with 7 vessels and are trading for 98 cents. With those kind of numbers, Castor feels kind of expensive. It makes me think that Reddit hype is still baked into that share price. We're not just talking about earnings reports and fundamentals anymore. At the beginning of the year of 2021, they were at like 19 cents a share. Reddit gets involved, and by February, I believe it was February 11th, they had jumped up to $1.73, and now they've slid down a little bit and are still hovering around that dollar mark. That share price is not because of their numbers. That share price is because of the hype that's baked in. What Castor does have going for them is this. They're a young company. Castor Maritime was incorporated and took ownership of its first vessel, the Magic P, in September 2017. The companies I mentioned earlier all have at least a decade head start on Castor. In a report on the industry, Transparency Market Research noted this: rapid urbanization, industrialization, and economic growth is likely to propel the dry bulk shipping market across the globe. Growing infrastructure development, which requires significant use of steel products, is a key factor for driving the dry bulk shipping market across the globe. Major investments across the globe by various governments in transportation are anticipated to boost the dry bulk shipping market. And these past couple months for the dry bulk market have been fantastic. January has been off the hook. I haven't heard about the February numbers yet, but this keeps pointing to more and more growth for all these companies across the board, not just CTRM. I also like that they're going to go wherever they can make some profit and wherever they can make some revenue. I like that a lot. Somebody that's willing to go outside of their, not necessarily comfort zone, but they're going to go where the opportunity takes them. On February 11th, Castor Maritime announced it was purchasing a pair of 2005 Korean-built Aframax LR2 tankers. I don't know what that style of tanker is, but I'm sure it's pretty sweet. Here's what Castor had to say regarding the move. As we have communicated previously, we are a company that aims to take advantage of attractive opportunities presented to us as these shipping cycles evolve. Therefore, we are very excited to be entering the tanker market at what we believe is an opportune time for this sector. I'll be the first to admit, I have zero desire to get back into tanker markets ever since I lost my butt cheeks on Nordic American tankers, ticker symbol NAT. Without a question, my worst investment of 2020. It just made so much sense. It made so much sense. I took a beating online for calling NAT out, and I said that they would not see $5 again once I did my due diligence, which I broke some of my golden rules, and I invested based off some emotion and some things I heard, and I didn't do my due diligence, and it came back and it bit me. And as soon as I did my due diligence, I said, it's never coming back to $5. And you can feel free to go back and watch those older videos, and it'll explain everything. But whenever I came out and said that, people lost their ever-loving minds. They were cussing me out on YouTube. A lot of you probably didn't see the comments because YouTube filters them out. I still get the pleasure of seeing them, though. And luckily, it aged well for me. But moving on. With Castor Maritime, I would tread very lightly. I would be very cautious. Now, do I believe that they will go up over time? Yes, I do. Do I believe that they're going to go up at the rate that I would like them to go up? No. Meaning, I believe that there's other options out there that I could put my money in and get a faster rate of a return along with more profits. I'm not being bearish on it, but I'm not bullish either. I'm just kind of almost indifferent. There's no innovation there. This isn't an industry disruptor. The only way for them to earn more money, essentially, is to get more ships. And even those ships, at some point, are capped on space. So it's like the revenue potential is ultimately capped. It's not like everybody can download something. It's not like another penny stock that I'm very bullish on, Interscope Hearing, where everybody can just go and get a hearing aid from Walmart if they want to. It's not the same with a shipping company. Your revenue is maxed out at some point with what you can move and how fast you can move it on those ships. And if you are limited on the amount of ships you have, you are limited on your amount of revenue. And by looking at the other companies and their share price, even when you have 40, 50, 70 ships and your share price is still only, we said, $11 from the companies we were looking at was, I feel like we can get more for our money in other places. Now, if you're bullish on it, then go, and you have a long time to wait, then go nuts. We're always going to need products. We're always going to need ships, and we're going to need to ship those products. So it's always going to be an industry, but the only way they can grow essentially is just by acquiring more and more ships and to make a substantial revenue. And I think for that share price to go up for what we want it to go up as, they've got a long way to grow. And I'm not hating on Castor Maritime. I think they're doing exactly what they should be doing. I'm just saying that we can do more with our money, putting it in other places than the return that I believe that Castor is going to give us over the long term. I don't think this is a 98 cents per share company right now. I think that Reddit hype is 100% baked into it. I think this company honestly is more of a 25 cent company right now, and I'm sure I'm going to get some dislikes on that just because people are so bullish on it right now. But even having 7 ships is not enough. It is not enough to generate enough revenue to push that share price up fundamentally. Now they may be able to get some headlines and push it up on hype, but on the earnings and revenue, no way. They are nowhere near where they need to be for me. But let me know what you think in the comment section below. I'd love to hear your thoughts. As always, I hope those stocks keep getting greener. I hope you stay safe, and I hope everyone out there takes care.